Welcome back, and in your top business story, Nakheel has issued a 211 million dirham interest and dividend payment to its lenders, according to a statement released by the company. It added that the due date of the payments is the end of August, in accordance with the restructuring obligations. The statement noted that the payment is a clear indication of the proper application of the restructuring plan, which supports the company's commitment of the planning process. Aldar Properties is looking to expand its property portfolio in the capital as it looks to deliver 3.5 million square meters of property into the market over the next 18 months. According to a report released on Wednesday, the company is looking to finish work on 4 major contracts in the capital. These include the Central Market in the city centre, now known as the Abu Dhabi Trade Centre, as well as Yas Island and Raha Beach on the mainland, and at its Al Fala scheme east of the airport, a 15-hectare theme park and more than 6,500 homes. Aldar also said it was also well on track to open its 235,000 square metre Yas Mall scheme in the autumn. Much of the decline in the global trade is attributed to crisis over in Europe and along with the rest of the world. However, the GCC region is not exempt from its effects, according to experts. However, while the ripple effect is inevitable, Doha Bank Group CEO Dr. R. Sitharaman says that there are many signs that show the region has learnt its lesson and has learnt it well. Countries such as Saudi Arabia, Qatar, Oman and the UAE have realigned their preferences to emerging markets such as China, India, Brazil and Russia in terms of trade, investments, banking and finance. Partnerships between the public and private sectors are growing, and the developments of non-oil sectors are receiving priority.
Today, the Gulf economies are running in current account surplus, fiscal surplus, investable surplus, and again, with oil price costing over $90, both Brent as well as WTI, you have a reasonable opportunity. The growth prospects are visible. The en bloc, the Gulf states, are going to perform not less than 5 to 6%. Huge infrastructure creation is taking place, and the fiscal policies of the various governments, whether Saudi Arabia or Qatar or UAE, are all going to modernize the infrastructure, road or seaport or airport. Everything is getting expanded. So we are stable and functional, but we are not, isolated from the Euro crisis.
Dr. Sitharaman further added that the GCC region is showing overall maturity and is financially stable. However, there is still a lot of work that needs to be done to sustain the growth, from transparency to policies. He says that from 2008 till date, the region is experiencing a consolidation period and can now look forward to a more exciting second half of 2012.
The trade cycle is in the ascending trend. The credit expansion was slow, but it's going to pick up because of the opportunities in terms of fiscal spending. And clearly, the banks, whether it's corporate side or retail side, treasury side, you have huge opportunity in the making. But what we need to do is to clearly define the risk, the lessons we have learned. Return on average equity of 15% is possible in this market in second half. Institutions who have done exceedingly well. There are many institutions who have done reasonably well in UAE and Qatar, even markets where there are less growth, but by diversifying the business model. And we're all counting a good performance, stellar performance will come in from 2013. This year, again, the second half will be more of a consolidation phase, and the banks will reasonably perform well.
First Gulf Bank was awarded the 2012 Best Islamic Deal in the United Arab Emirates for its $650 million Sukuk issuance in August 2011, which was 6 times oversubscribed. The award was presented during the Asset AAA Islamic Finance Award in Kuala Lumpur. The FGB 5-year Sukuk was subscribed by more than 200 different investors worldwide. 46% were based in the Middle East, 24% were from Europe, 24% from Asia, and 6% from the US and other markets. With that, let's now take a closer look at the stock indices across the GCC.